Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the show, everybody. I'm your host, Brett McCollum, and today I'm here with Bill Bronchick, and today we're going to talk about the legal side of creative finance. I'm really excited about that. But before we get after it, guys, I want to talk to you about Investor Fuel. At Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs to 5X their businesses and allow them to build the businesses they've always wanted, allow them to live the life they've always dreamed of. Without further ado, Bill, how are you, man?
I'm awesome. Thanks for inviting me.
Man, I'm definitely excited to have this conversation with you. Got to talk to you a little bit, pre-show, just kind of some of the background of what you do, and guys, you're in for a treat on this one. But Bill, catch us up to speed, man. Tell us a little bit who you are, some background. Who's Bill Bronchick?
Yeah, originally born and raised in New York. I come from the factory of Jewish lawyers from New York. I moved to Colorado in '93. I practiced law for a little bit of time in New York, real estate mostly, and business. And when I got out of law school, I thought, I got a license to steal, 40 hours a week, times back then it was $250 an hour. Now it's $5. But I thought that was a lot of money. But I realized after about a year of practicing, this is work. I don't care if you're making $25 an hour or you're making $500 an hour. You're trading hours for dollars, and you need a system where you got money coming in when you're not able to, willing to, or, want to work.
Right.
So that's why I got into real estate pretty quickly. My mom was also in real estate. She dragged me to a big conference in Salt Lake City, Utah, with Mark Harrelson. I don't know if you remember him. That's a blast from the past. And that's when I met my old friend there, Dr. Albert Lowry, and was just blown away about creative finance and the ideas that he had. And we've come, still remain good friends over the years, and we've learned a lot from each other too. And I just got right into the real estate game in 1992. I moved to Denver in 1993. I live in Colorado Springs now. My office is still in the Denver area, and I practice mainly real estate, business entities and tax strategies, and some estate planning. But I'm also, a very active real estate investor, been so since 92. I've done every type of deal, residential and commercial, you can imagine. But now I really focus a lot, especially in my practice as well, on creative finance because of the current environment of, higher interest rates, harder to get a loan. If you can leverage the existing mortgages, 67% of which out there are still under 4%.
Wow, man, there's a lot to unpack with this. So, all right. So 92, 93, you're kind of just really launching both your investment side, but also your practice side too. I know you also mentioned the pre-show that you had a RIA that you had operated or started at 1.2. When was that?
Yeah. So actually, I didn't practice law from when I moved to Denver from 93 93 to about 97 and just did real estate full time.
Wow.
And in
Okay.
96, I started the Colorado Association of Real Estate Investors, which at one time was the largest group in the country. We had 3,800 members. We had up to 400 people in our monthly meetings.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Wow.
Annual conferences of up to 1,000. It was a big organization.
Yeah.
And then I just got a little burnt out of that around 2012, handed it off some good people who are running it now under Colorado RIA. And so now I still do my law practice. I invest in real estate and I write books and do seminars and, do great podcasts like this. And I also teach a couple of classes at a local college up here on real estate and business law.
Wow.
And I also play in a rock and roll band.
Hey.
and in the worship band on Sundays.
What instruments do you play?
I play guitar. I've been playing guitar since I was 8.
Yeah, same here, man. We should.
Oh, cool.
We're gonna be best friends right before you know it, Bill.
Yeah.
Very cool. So, man, all right, let's double back a little bit. So you mentioned creative finance back in the 90s, because and I thought this is gonna sound silly to somebody like you that's been, in the game for as long as you've been. But it's almost funny, like if you've been 10 years or so or more, you're kind of a veteran in this space almost these days, right?
Yeah.
Which is wild to say that out loud.
Right. I think if you haven't been through at least 2 cycles, you really don't know real estate.
You don't. And I'll be completely honest with you, Bill. Like, this is my first real, like, whoa, this is a weird one,
Yeah, this is a weird one.
And I have never seen it or been through it. I don't have the experience to walk through.
Yeah.
And that you mentioned cycles. That's where I was kind of leading us to a little bit. So you've been through a few.
3.
Yeah.
3 cycles. And I've invested in 12 states.
Wow. So the first big one that I can think of, there's probably something that I'm missing, was 2001. Was there anything prior to that you went through?
Oh, yeah. The late 80s, early 90s, the crash after they changed the tax laws. And then the savings and loan debacle and the crash of those. And then they formed what's called the Resolution Trust Company, the RTC, which was a government agency that took over the failed S&Ls and liquidated all their properties. And I bought a bunch of properties from them in the early 90s.
Wow. Okay. There you go. And then, you go through 2001, 08, and now today, whatever this is, whatever they're going to call this in, 10 years, Yeah.
Who knows?
Yeah. Tell me a little bit, like, I understand, like, you were doing creative finance back before people talked about it. Like today it's kind of like the buzzword and, sub to this, that, and the other, creative finance, this, that. But back then it wasn't nearly as popular, was it?
Right. Well, actually, back then you still had assumable loans available. Those ended around 89 with VA. VA and FHA loans were assumable, and that means you didn't have to qualify for them. You could just assume them in a corporate entity and you're not liable. So I used to get a bunch of those, but those were 11, 12% interest.
Right.
So after that, I learned creative financing, I didn't want to borrow from banks back then. The going rate for a conventional loan for an investor was, between 9.75 and 10.5.
Wow.
With 30% down. And I didn't want to do that. I wanted to take over people's existing mortgages and leverage their existing financing. And it really started actually back in the late 70s, early 80s when interest rates were, 14, 15%. And if you had a neighbor with a 5% mortgage, you wanted to, take advantage of, subject to, or a wrap. But banks were very aggressive back then about calling those loans due because, if the market rate is 14 and you're taking your neighbor's loan at 4 over, they're going to say, wait a minute, pay that off so we can lend it to somebody else at 14. Now it's not that big of a difference.
Yeah. So going through, how did you leverage creative finance going through some of these market cycles?
Yeah. So, what I did was a lot of subject twos, just taking over existing mortgages. And especially like in 2008, 9, 10, when there was no equity, and some of them even negative equity, if the mortgage was at 4%, I would take that.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Because at the very least, I could break even or make a little cash flow as a rental and then just wait for it to cycle around.
Okay.
And that's what a lot of people did. Not enough people probably, but a lot of people bought up stuff with no or negative equity subject to, and then rented it out. And then by 2013, 14, 15, the rents, started popping and the values popped and the equity came back.
Okay. So let's back up a little bit on let's kind of high level subject to a little bit just for a moment, because I think it's worth exploring and diving a little deeper on.
Right.
Subject to, give it a loose definition, if you will. And then it's kind of got, obviously there's a large following on sub two and things like that. From the legal side of it. Okay. Maybe give like a little context of what you're seeing from the everyday investor, and then what the best practices probably ought to be.
In layman's terms, buying subject to means you're taking ownership of the property. You're taking a deed without assuming the existing loan, without asking permission, and without paying it off. You're just going to continue paying it on behalf of the borrower, the seller. What it means to take subject to means there's a lien against the property, a mortgage or a deed of trust that is not being paid off. So you're taking it subject to the existing mortgage. You take subject to in a deed lots of things, like subject to easements, subject to unpaid taxes, subject to maybe a right of way, subject to homeowners association rules. So you take subject to a lot of things. You're just taking subject to the liens.
So I see a lot. I talk to a lot of people. We have different avenues that we work with as well. I see a lot of bad practice in sub two today.
Yeah.
And I don't know if it's intentional as much as it is probably ignorance.
Both.
Yeah. Probably that too. What would you say like maybe a couple of best practices, would be for like on the legal side of it? Because it's not as simple as just like, here, sign this thing, and now I've got, your house sub two,
Right.
Like, walk me through some of those.
Well, it can be. I could literally say, hey, here's $5,000, sign this quitclaim deed, and now I own your property subject to. It can be that simple, but that's foolishness.
Yeah.
You want to use a purchase agreement with extensive disclosures about the consequences and risks of the transaction, and be truthful about it. So if someone says, how do I know you're going to make my payment? You be honest and say, you really don't.
Yeah.
So, do you have any other options at this point? If not, you're already 2 payments behind, Mr. Seller. What do you have to lose?
Right.
So being honest with people is very important. Also, don't make promises you can't keep. And this is one that really gets me. A lot of these contracts I'm seeing, what happens is the seller's hesitant to give the deed, because once you give the deed, you don't get the property back if the buyer defaults. People do it in divorce all the time, and people think it's uncommon, but it's very common. Husband and wife getting a divorce, husband deeds it over to the wife, they're both on the mortgage, and she promises to refi it in 3 years, and she defaults after 1 year. The husband's out of luck. He gave up his ownership. He can't get it back. And it's the same thing with the sub two. So people are promising, well, I'll put a deed from me back to you in escrow, and the escrow agent will give it back to you if I miss 2 payments. First of all, that's incredibly dumb. If you're the buyer and you missed a payment, inadvertently, or maybe the lender changed servicers and you really did make the payment and you're trying to work it out, you're going to give up your property.
Right.
You don't want that. And second of all, you're putting the escrow agent in a very difficult position if there's a dispute. Yeah, you're in default. Yes, I am. No, I'm not. So, and then also it's unenforceable for the most part in almost every state in this union. You have to foreclose or contractually sue a buyer to get the property back.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
You can't just put a deed in escrow and waive all the buyer's equity. That's unenforceable. People have been trying to do that with loans forever. I loan you money, I put a lien against your house, and you give me a deed in escrow, so if you default, I don't have to foreclose you. Every court in every land would say that's unenforceable. So it's similar. You can contractually agree that if I don't make more than 2 payments, I promise to deed it back, and hopefully you'll do the right thing. That's fine. That's fine.
But it's not necessarily enforceable in the courts.
Yeah, it's not. They could sue you for breach of contract in that case to force you to give it back, but they still have to go to court. There's no automatic reversion back. Short.
What about like a deed in lieu? How does that work in these situations?
Yeah, a deed in lieu. You can voluntarily agree to anything you want after the default. So that's legal, but you can't have a deed in lieu up front. That's not enforceable.
Okay.
Yeah.
So I've always, on the investor side, like, this is so interesting because I know what, like, the things that I think I know, right? As an investor, I've been doing this a long time. I know what I'm doing. And then we tell our sellers, a lot of the investors on the sales side of it, because your seller will like, how can I know that I'm going to be okay? Like, what happens if? And everybody, like, they should be asking those questions about what if.
Right.
And the only safety I can tell the seller that I've thought in the past here is, well, Mr. Bill, I'm not sure, like, I can't promise you anything. God forbid something happens. What we would like to do is record and have a deed in lieu of foreclosure at the point of us closing. If we don't miss it, then worst case scenario is you get the house back with anything we've created.
Right.
But
again,
is there anything there that you can find? Well, like,
it's not enforceable, but the worst thing, as the buyer, why would you want to put yourself in a situation where you may not be in default, where you're just fighting with a servicer who's not crediting your payment, and then all of a sudden, whoops, you lose your house.
Wow.
That's not very bright.
Ladies and gentlemen, is why you get a great real estate attorney behind you so that you don't do these things, right?
Yeah. As the buyer, the right thing to do, which most people don't, is if you can't make the payment, give it back.
Yeah.
That's the right thing to do. But most buyers just walk away when they can't.
Unfortunately, sometimes the right thing and the legal thing aren't the same, and that's
right.
That's
and along
tricky.
those lines, what a lot of people do, they get a contract with a seller subject to. The seller goes, I don't think I want to close. And I've seen contracts that impose like a $25,000 penalty on the seller, or a buyer who wants to, force them to go to closing. I go, what are you, crazy? Just walk away. You can't force someone to give you their house subject to ethically. If they're not comfortable, say, hey, it's no problem, and walk away. If it's a cash deal, that's a different story. If it's a cash transaction and the seller says, I got a better offer. No, you don't. I'm going to hold them to it. But if it's a sub to or a seller carry, I'm not going to force them to do that. I'll say, hey, that's great. And then I can use them as a reference later on that I'm a good guy.
Right. There you go. I'm just thinking of things as we're talking to some of the, maybe some, like, our audience of investors might be thinking, why elect to use sub 2 and not a wrap?
That's a good question. So a wrap is a sub 2. The only difference is, instead of just taking the deed, you're giving the seller back a mortgage or deed of trust, a lien against the property, that allows them to foreclose and get the property back. Now, that would seem fair and the right thing to do, but here's the problem. Number one, you record that deed of trust or mortgage publicly, which informs the bank of what you've done.
Right.
So that's giving it away. Number two, my experience has been, especially in a mortgage state, it's not a big of a deal. But in a deed of trust state, especially where I live in Colorado, if you lose the documents, you have to get a bond to secure it.
Oh,
So if I try to contact the seller in 5 years and say, hey, I need that deed of trust, and they go, what deed of trust?
where is it? Yeah.
Where is it? Now I have to go get a lost instrument bond, which costs thousands. Or if I could even find the seller 10 years later.
Yeah.
So, I look, my experience has been that most of the sellers who are willing to deed me the property sub 2, they don't care. I mean, they're
Correct.
already behind. They're already thinking I'm going to walk and let the bank take it. Their objection is not how I know you're going to make my payment.
Yeah.
And I think a lot of people over explain that to sellers who don't have that objection. And that's foolish
Creating
negotiating.
objections that don't exist yet.
Exactly. They're creating objections that don't exist. And then they're making promises they can't keep.
Mm-hmm.
It's like the deed and escrow thing, So I just, leave it as is. I mean, there's a third option, which is to buy on a contract for deed where the seller has title until you pay them off. And I'm loath to do that as the buyer because, again, if the seller disappears, if he just decides he doesn't want to
I don't
deed it
love
to
that
me
one
at the
either.
end, if he files bankruptcy, I'm toast. I've done it, but the sellers were wealthy, sophisticated people who were not in financial trouble.
Got it. All right. Another question on the sub 2 thing. Yeah, because it is just what's really popular right now. When doing sub 2, and what do you see most? I guess how do you recommend taking title when you do sub 2?
Mhm.
So, or how do you into a trust, into into an LLC, what's your process map for that look like?
Well, I'll give you the lawyer answer. It kind of depends. It depends on what you intend to do with the property. If you're just going to keep it long term, I'd put it in a land trust with my beneficiary of the land trust being probably an LLC. If I'm just going to flip it, it really doesn't matter. Or if I'm going to buy it subject to selling on a lease option where I'll probably be out in 2 years, it really doesn't matter because the lender is not likely to catch it, call it due, or do anything in that short time period, unless you're talking about a local commercial branch bank or small credit union who might make a stink. But big banks don't care.
Yeah, and that's what I've been hearing too. But I've also been hearing on the other side of it's, these notes are being called due more and more. What probably is happening that's triggering the bank to even see that?
I'm not seeing that, honestly. I'm not seeing that. I'm hearing, more wives' tales about it. Or they're just, like I said, it's a small commercial bank, or this is the one that a lot of people make mistake. If you have a state co-sponsored FHA down payment assistance program where the state agency lends the 3.5% down and puts a second against the property, they will also service that loan and they will catch it and they will call it. A lot of people are doing those. So FHA loans are okay as long as it doesn't have that down payment assistance program.
So it'd be
Because
a
they
good
want that money
idea
back. They want
if you
that money
find
back
out.
for low-income people. So
Okay, so it'd be a good idea if so Bill, you're my seller and you have an FHA loan, and it would be a good idea if I saw your mortgage docs ahead of time just to make sure, correct?
Yeah.
Okay. And a good attorney ideally should be able to help you with that.
Sure.
If they understand creative finance.
Sure.
Okay. Yeah, I mean honestly, one of my big takeaways from our conversation today, Bill, is like, I know you're in Colorado, but if our audience, you're not listening if you're listening outside of Colorado, that is, like, if you're in Colorado, just get with Bill. But if you're outside of Colorado, find a real estate attorney that understands creative finance at a level that's going to protect you. And obviously you want everybody, all parties protected as best we can, right?
Yeah.
So Bill, you mentioned too, you kind of highlighted a little bit, and we kind of glossed over it a little bit. You're an author, you got books, you coach, what are you working on today?
I'm actually working on, I have for those of you who are watching, this is pretty close. If you're in Colorado, I have a workshop the weekend of the 22nd of March, 2025, at my website at legalwiz.com. Other than that, I have tons of articles and videos. I have a YouTube channel with hundreds and hundreds of videos. And I think I just hit 70,000 followers on YouTube. It's just /Bronchick. I don't do Instagram. I'm too old for that. Uh, but I do a podcast occasionally when I have the time and patience and discipline, like not like you do, um, and that's on Apple. I'm also, investing wise, I'm doing the same thing. I'm actually buying a new principal residence
Okay.
with creative financing. This is an interesting story. The seller,
I was going to ask you, break that down, because
yeah.
that's,
So this is interesting. So the seller, it's a real nice neighborhood. It's 3-year-old house, golf course community, real, big house. And so they bought it 3 years ago, a veteran couple with a VA loan. Tragically, the guy commits suicide like the first 3 months. So the wife has the house 3 years. The VA has not foreclosed. 3 years. And they're usually like 90 days, like clockwork. I don't know how she got them to forbear, but they have. So she's about 100 in arrears, and the loan is 3.6. So they're offering it as a short sale, and I go, wait a minute. I call the listing agent. I go, how much is owed? What is the balance? Blah, blah, blah. I said, tell you what, I'll just make up the arrears. I'll take it sub 2, and I'll pay your fee. And the seller says, well, what about my VA entitlement? So I can get another VA loan. And I said, who's going to give you another loan? You haven't paid the mortgage in 3 years. And no offense, I didn't say this to her, but her primary earner, her husband, is no longer there to pay the mortgage. And finally I said, all right, how about I promise to pay it off in 5 years, like a balloon?
Sure.
Yeah. So, because she's not going to get a mortgage in the next 3 or 4 years with that payment history, right? And if she does a short sale,
this might be a silly question to ask. I'm just thinking out loud here.
Yeah.
Being as she was not the veteran, the husband was the veteran, correct?
No, but she's entitled to the wife is still entitled to the VA entitlement for the loan for her life.
Interesting. Okay.
Yeah.
Okay.
Now I can't assume. Well, in theory, I could assume the loan, but it doesn't give her entitlement back. So there's no advantage to that for her. So I said, I'll pay it off in 5 years. And she said, she said, I'd rather be foreclosed than lose my entitlement. So we went back to short sale.
Lack of education there.
Which is going to hurt her credit pretty bad.
Mm-hmm.
But I'm getting it 100,000 cheaper that way. It's worth about $1.2 million, and we have it under contract for 855, and we'll see.
Yeah. So that's really cool. But let's say that on the creative side that goes through, right?
Yeah.
I know personally I've run into some roadblocks with creative finance as it pertains to VA loans.
Yeah.
I don't know the legal necessarily behind why that is. Do you have any ideas as why that could be, like why VAs present challenges?
No, actually, VA loans subject to are not a problem. It's brokers and title companies are under this delusion that since it's a federally guaranteed loan, it's a federal crime. That is false. Every time someone says that's illegal, and I ask them, what law are you referring to? And they can't cite me anything.
Yeah, a lot of time, the one I remember that I'm thinking of now, it just jogged my memory. It did say in the mortgage docs that it's
you may not assume this.
Right.
Yeah, it says right on the note, you may not assume this loan.
And I think they took that as we can't do the sub 2.
Well, of course, I'm not going to assume it. I'm going to take a subject to. So I laugh when I see that. But interestingly, this is an interesting tidbit that a lot of people don't know. If you buy a VA loan on a contract for deed and don't transfer title, the VA will not call it.
Say that again.
A contract for deed, where you don't transfer title up front, is a transfer within the meaning of the due on sale. So any lender can call the loan even with a contract for deed. But the VA is the only lender who won't.
How about that?
Yeah.
And you know why?
I don't know why. It's in their loan servicing manual. And so if you buy it subject to using a contract for deed, and then you record the contract, of course, to protect yourself, the VA won't call it. But then you're opening yourself up to other potential challenges of the deed not being in your name and the seller disappearing and dying, or
right,
filing bankruptcy or whatever.
So best to make sure you vet the seller a lot.
Yeah.
Of the time. Yeah.
I mean, that's just a tidbit. I still take a VA subject to all day long. Never had a problem with one. It's just that a lot of real estate professionals think that FHA and VA loans, that they're illegal to take subject to because they're federally insured and guaranteed loans. And that's just false.
Yeah. Man, very cool. But guys, Bill, tell us again a little bit, like you've got your workshop coming up. You've got, what are some other ways people can get a hold of you, look you up if they need to come back to that for us real quick?
Sure. So LegalWiz, WIZ.com is my information website with all kinds of stuff about real estate investing. Bronchick, my last name, LAW, law.com is my law firm website for those of you who are in Colorado. And I do consult with people in other states, but I just can't represent you in a transaction. So if you want to walk through the logistics and consult with me for an hour or two by the hour, I could do that. But I can't represent you from A to Z through the closing.
That's amazing, guys. And seriously, like, if you don't have legal contacts, like, take Bill up on that, because the last thing you want to do is watch something on YouTube University for 5 minutes, become an expert, and then think you know what you're doing, right? Get some legal
just enough to be dangerous.
Yeah, get some legal professional help to make sure you're doing things the right way, because the last thing you want to do is get in some hot water. Bill, man, this has been great. I know we could probably talk for days on end and go back and forth, and but we want to keep it tight and pack a lot of value into this. So maybe we'll just have to have you on for another follow-up or something.
Sounds good.
Do some more digging. But yeah, man, it's been great.
We'll jam,
Yeah, that's what everybody wants to hear is jamming. That's what yeah, Bill, you're great, man. I appreciate it, guys. Seriously, look Bill up. And until then, we'll see you guys on the next episode. Take care, everybody.
Appreciate it.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.